Welcome back. At least in the U.S., the pendulum seems to be taking a hard swing away from corporate efforts to be good citizens, so-called ESG initiatives. So what's happening to those good intentions? Here's what you need to know. ESG stands for Environment, Social and Governance, the idea being that for-profit businesses should also focus on these greater good kinds of issues. Many built promises into their mission statements. If you want to pinpoint the chill on ESG, Donald Trump's executive order banning diversity, equity and inclusion programs across the U.S. government is a good place to start. But it actually started with corporations, including Ford, McDonald's, Meta, Walmart and more, all openly ditching their DEI efforts in the past 6 months. The goal of DEI was never about quotas, but the perception seems to be that it promoted unfairness to some groups in favor of others, with many focusing on racial inequity as one place where DEI promoted difference rather than inclusion, and it argued that it produced reverse discrimination. But does diversity help the bottom line? Probably not directly. A McKinsey study suggests that companies in the top 25% for gender parity were 27% more profitable. But correlation doesn't mean causation, and there could be other factors at play, including the size of the company and its profit to begin with. So what about the environment? There's a similar chill afoot. The world's biggest banks are all bailing on the Net Zero Banking Alliance, which aimed to get them all on the same page around pricing the risk of climate change. Recent efforts in Canada and elsewhere to keep businesses honest with their green promises, keep them from greenwashing, may also have a chilling effect on their willingness to promise anything at all. Perhaps predictably, lawsuits have been part of the problem, including those targeting companies who said their ESG efforts would help their profit. That there is a chill on these kinds of corporate efforts across North America seems clear, but is it a temporary setback or even a chance to do things better? Carol Geffner is president of Geffner Group and author of the book Building a New Leadership Ladder. Carol, thanks for being with us.
Thank you. It's a pleasure to be here.
I can't help wondering, for somebody like you who's spent a significant amount of time thinking and working on improving diversity in corporate America, what it feels like, right? Does it feel like the pendulum's swinging hard the other way? Does it feel like a setback? What's your take?
It feels like we are in the midst of a tsunami. It feels like we have, on one hand, a PR effort and a real effort to turn back the clock. And on the other hand, there are organizations, and I can tell you I know this through research, but also through practice, there are organizations that are staying firm. So we've got a continuum, and it will depend upon a couple of things. It will depend upon the CEO or president of whatever the company is, large or small. It will depend upon the culture, and it will depend upon the engagement of people inside of the organization if the CEO and president is serious. And that's really the starting point.
One of the things we seem to have seen are organizations reacting to litigation. I mean, they were seen to be making promises that they couldn't actually deliver on. And so they're kind of backing off, saying, well, then we're not going to do this at all. Is there a way for lawmakers, maybe not in your country, I'm going to be honest, Carol, but in other countries, to help protect companies that do want to make these efforts that are sort of outside of their reason for being? Their reason for being is to make money for shareholders.
It's very easy to say these programs can prompt or foster litigation. However, we have to look at it through another lens also. What about the cases that have been brought to the courts for companies that have not practiced any form of DEI, no matter what it's called? What about all the discrimination cases and the hundreds of millions of dollars that companies have spent because they are not treating people fairly?
I want to. We don't have a ton of time here, but will these efforts return? I mean, is this kind of a winter for some of this work, but that it'll continue in the right direction, or do you think we're going to have a whole rethink about what to do here?
Well, I think a lot of companies are going to rethink. If there's a commitment, they'll redefine it. They'll probably narrow it. They might even focus on words like and concepts like inclusion, belongingness, connection. So some companies will go in that direction. A few companies will stay firm, particularly those who are not in the headlines. And then many of the larger companies will abandon it because they never had the support to begin with. Right. And they never wanted it to begin with.
Carol, so good to have you for this. Appreciate your time.
Thank you.
Carol Geffner, president of Geffner Group, author of Building a New Leadership Ladder. Watching businesses roll back climate promises has to be painful also for those who've been trying to get it on the radar for years. Toby Heaps is co-founder and CEO of Corporate Knights. Toby, thanks for being with us.
Thanks, Amanda. Nice to see you.
Well, I don't want to be a downer, but it has to be a little painful to see what's happening certainly across the U.S., but also in Canada, where suddenly climate initiatives seem to be taking a back seat and everybody can kind of openly say, yeah, we're not doing that right now.
Yeah, it's these kind of watershed moments are interesting because they're sort of like a stress test, and you get to find out who really believed what they were saying and who was just kind of going with the flavor of the day or going with the flow. And we've seen over the last 5 years on the climate change side, you saw about 40% of global market capitalization signed up to something called a science-based target for going to net zero. So pretty serious commitment. So 40% of all major global companies by market cap signed up to that. And then you saw the majority of global financial flows, 135 trillion, sign up to something that Mark Carney was co-leading, called the Global Financial Alliance for Net Zero. Mm-hmm. And what we've seen happen is the real economy side, the ones who had signed up to the science-based targets, the companies, the renewable energy companies, the electric car companies, while some of the high-profile oil and gas companies have scaled back their climate commitments, most of the real economy companies have stayed engaged and are still part of that science-based initiative. Where we did see a sort of collapse is within the sort of banking sector and the large asset managers. Not all large asset managers, but the major ones like BlackRock and those kind of folks. But you have big ones in Canada like Mackenzie and these types that are still in there. But you saw a retrenchment there. And so I think what's interesting is the trends that we're seeing at Corporate Knights is within the real economy, the growth juggernaut from a revenue and from a sort of capital expenditure perspective has definitely been a sustainable economy as we define it, which includes things like green energy and electric cars and energy efficient buildings. And we've seen that growth vector double over the last 5 years globally and triple for investments. And so in the real economy, this is what's happening, but we're hearing noise right now and we're finding out who's kind of phoning it in, who really believed what they're saying, and who didn't have the courage of their convictions.
Toby, does it make the case, I mean, in some ways, Corporate Knights is a little bit about kind of recognizing companies that were doing these good things ahead of regulations, certainly when it came to climate. You've been doing this a long time. Do we need the government? We've only got about 30 seconds here, but do we need governments to back up these corporate efforts? Corporations are kind of saying, well, we're not just going to do this for the goodness of our hearts anymore. We need actually laws and regulations to force our hand.
I think we've kind of moved within publicly traded companies. We've moved from the moral rationale to sort of material business opportunity rationale.
Right.
With respect to climate change, I think the main thing we need government to do is just to get out of the way. The permitting delays are really the major factor holding back the green transition at the moment. The economics now are quite compelling. And that's why you see places like China where over 1 out of 2 cars sold last year was a new energy vehicle or electric vehicle, which was 10 years ahead of schedule. So that's the economics now are so powerful. Most people have not realized it. And people like me who were calling for government intervention for many years, who are watching really closely, are now more calling for government just to get out of the way and let the business and engine of commerce really steam forward.
All right. Interesting perspective, Toby. So good to have you for this. Really appreciate it.
Thank you. Take care.
Toby Heaps is co-founder and CEO of Corporate Knights. Coming up, the list of unknowns is growing for Canadian business, so how to plan for what you don't know. That's still ahead. But first, in a new low watermark for lost luggage stories, Air Canada will pay just $18,000 to Brinks after losing $20 million of gold bars. The case rests on some technicalities, but bottom line, Air Canada isn't to blame for the full value of the loss and instead has to compensate Brinks as though it lost regular cargo. 10 people have been arrested in the heist, including some Air Canada employees. Not accounted for, the gold, most of which has vanished into thin air. A familiar feeling for many travelers. We're back after this.